GM, Sunday, trade of the day. Today's the 5th of May. I want to look at paths for Bitcoin because you know I'm long. So I'm currently long from down here, 59.4, and have been trading it in and out a bit, adding to it, taking profit, adding to it, compounding a little bit on the way up. And I want to just look at the higher time frame view because my main idea, right, is this is the last area at which we can reject. Now, yesterday, we actually did have a close. If you look at the line chart, we actually closed above the breakdown level. Previous day, highest daily close here was 63.8 and we closed at 63.877. Now, closing right at that level is not enough strength. You can find numerous examples of where price gets above a breakdown level or a structure level and does not hold it. You have to see more, at least I do, the way I trade. I have to see more than that to say that it's a true trend shift. Back here, the one that everyone looks at, you had this level, right? You basically had these flat highs, 19th and 20th of January. That was the last daily highs, close on the close basis, right? Ignoring the wicks, before the breakdown. And then we closed through it here. We got strength the next day, and the following days it held above, and it held above the 50. So we're not above the 50 right here, even though we got that close. It's not above the 50. I would need to see an impulse through a few days reclaiming. Basically, Bitcoin needs to get above 64 and consolidate for it to have any chance of being this type of path. Now, it doesn't have to be that type of path. And it probably won't be. It'll be something entirely different. Another example of one coming off the lows and showing strength. We're looking at like previous bottom reversals, right? Is this one? We had the highest daily closes. You had the push down, you had the break back above, and then break 1, 2, 3, 4, and it just kept holding and consolidating above these levels. Now this was even below the 50 EMA, but you could see an early sign of strength there, and that obviously led to a significant rally. So I'm looking at picking out the ones that are leading to significant price rallies. Whereas here, I don't think there's necessarily a huge rally coming. This isn't a setup that tells me anything. It tells me the strong impulse off the lows, but as I'm going to explain now, you can see both. So I'm obviously still long. When would I close my long? When would I cut it? I would cut my long if I saw the red path, right? Because the red path is one I've seen many times before. We push up, take the highs, or even don't take the highs, but it weakens and just falls over. Now let me remove these, hide these other ones, and just look at the red path. Because it's really simple. If this is just a bounce, right? If this is just a bounce into a lower high, then it will do a top, and the top would look like something like this, some form of that, and it's bullish on the way up. And once it flips to the other side, you're on the right side of the V. On the way down, bearish, right? So a lot of people look at this and say, oh, that's it up, now it's starting to go down. Typically not. The tops tend to go along a bit more. I think if it's going to happen, be something like this. You'll see it try to push, it'll drop off, it'll bounce, lower high, and at that point there, I'll cut. Because then it's highly likely to be a completed top information. If it just drops down from here right away, like this yellow path, so we take off the red and the green. If it drops down like the orange yellow path, I wouldn't cut it straight away because I don't think this is a top, right? It doesn't tend to top like that with just that last push and then straight off. So I actually think if it drops straight from there, it's more likely to actually hold somewhere in this general area, right? It could be somewhere around here. Generally, it's somewhere around that previous support, just wick slightly below it. The 1 hour bands go red briefly, then it reclaims and has a strong pump, taking out all that. And at that point, I'll be watching to see, does a top form there? And if it followed that path, I would be cutting it over here. That's where I would cut. Because of course, this could also just lead to squeezing continuation, right? But you have to cut somewhere, so that's where I would cut on the second path. Third path, the green one. This is the stereotypical really strong squeeze. This is how it would look if shorts are really offside, longs are sidelined, and they can't get back in. It'll just keep grinding up. It'll be really low volatility. Right, there'll be lots of little fake outs, but they won't actually drop off far, and it'll go up and it'll just grind and grind and grind and grind. It'll finish with a big impulsive candle. And I actually think, even though this looks crazy because it's like straight up only, I actually think this is more probable than people would imagine. Not saying it goes all the way to there, but some kind of grind, and then a big impulse, because that is what gets everybody in the worst possible position. Because people are not good at getting onto these trends when they're trending up. So it trends up, it doesn't pull back, doesn't get a chance for longs to get on board, and then it impulses super hard up into the high 70s, or low 70s, sorry. And even though people know, fuck, I shouldn't buy into resistance, the FOMO's just too much, right? Because they've missed the entire thing. And then at that point, it either sweeps the highs, rejects, comes all the way back down, or just rejects and come all the way back down from there. And bleeds the entire thing out. Because it's just an aggressive squeeze. It's just really a brutal short squeeze. And the reason why they can continue being stronger and stronger and stronger is because people tend to short them, right? People tend to short them again and again and again. They keep jumping in to new shorts. And so we'll take a look at that here since we've been up at the highs. Funding rate flips from negative to positive, but it's not even back to neutral yet. So funding rate is basically flat. We still have a spot premium as price rises. Now the spot premium is decreasing, but certainly there's nothing of concern there to say that this is overheated or that the market's too long or anything like that. Doesn't mean it can't go down, but there's definitely still fuel here for continuation, right? Now, that doesn't mean, this is the other thing, like people, you can't expect this to happen. You don't know this is going to happen. That's why you have to identify multiple paths, right? You don't know that's going to happen. There's no way to know. And so the only thing you can do is have all your paths. If I can get them up, there we go. And play them. Now, what about shorting? Where would I short? I would consider, anytime I cut the long, right? So if I cut the long on the red one there, I would consider a short. If I cut the long on the yellow path, I would consider a short there. The difference though, and why I've got these zones drawn out, is that we can dip down into here and just be hunting late longs. Basically anything above 60 can just be a bullish pullback, chops around for a while, and then back up it goes. So when you're talking about taking shorts, I am very confident we will pull back, because I think, again, the longer this goes up, so here we are now, the more this goes up, the more people will get long, and there will be some kind of sell-off at some point to take out those longs. But if it's bullish, it's just a dip. So when you're talking about shorting, a lot of people look at this bounce that we're in right now and they think, oh, when this fails, it's new lows, Bitcoin to 52k. But it doesn't have to be. And it almost certainly won't be unless we have real weakness. Because I'll get a new chart and I'll show. People expect this to happen, like this kind of move to happen. It's like, okay, here's Bitcoin, it's up now, we've had this bounce in, that's going to reject, and boom, new lows, and it just collapses. But in reality, because we reclaim 60, it becomes a trader's market. So this is far more likely of a path, even if we are going, let's say we are going to 52, this path is more likely, which is we go up more, people get too long, it drops down, people get bearish and start shorting, it holds, it chops around, and then it makes its way down after, right? And it takes days and days and days for that to happen. That's the thing. That's the big difference. And maybe it's easier to view it on a 4-hour time frame, right? Where we keep pushing and grinding, chop people up, drops off, It's just longs getting liquidated. People short thinking there's new lows coming. It holds. It pushes up. It maybe even touches those highs. Chops around. And then eventually falls off. And the time to actually take your short to new lows is when if you're patient and you see this forming. Because believe it or not, before you actually break to new lows, there's always a sign. There's always weakness before you actually break to new lows. There wasn't much weakness showing over here. This was still relatively strong, and we nuked down. But we didn't make new lows, right? We came down to the 60 level without breaking it. This was different. We actually did break the lows here. Now look, we had the weak bounce, and we had this. It's just grinding down. There's no bounce. There's no strength. Grinding. That's clear weakness. You do not ever want to see Bitcoin after a move up. You don't ever want to see Bitcoin moving like this, where it just looks like it can't bounce. There's no momentum, because they often just fall off a cliff, like that one did. And this is very, very common. This happens a lot, right? What happened with Bitcoin before it finally broke this 40k level? Even though this ended up being a bullish shakeout,